Hey, good afternoon, everyone. Thank you so much for giving me your time. And uh, This is Mark from Right Line Trading. Now, didn't have a chance really to update the name of the system that we're offering you. It's a variation of the money flow tracker, but it's a very, very different system. And it really does have a golden triangle entry. Right before I started this webinar, I did a session of the battle room where we looked at stocks and options, and this entry gave the most remarkable entries on stocks for options traders. Many of them I'm in, and I'm sort of jumping ahead, but I think you're going to be very impressed with this analysis. And it's a very unique system. We've never offered it before in this type of configuration. Now, quickly, I just want to go over the disclaimer that all signals and trading opportunities provided orally, written, or electronically are for education and demonstration purposes only. We take no responsibility for any participation by visitors or subscribers within any of the markets, or for any of the profits or losses that you may may be incurred. Everyone knows that trading involves a substantial amount of risk, and you can make a substantial amount of money, but you can also lose a substantial amount of money. So yeah, participation in these markets is not necessarily appropriate for everybody. I mean, you need patience and discipline, and you have to bring certain characteristics to the table. I'm going to try to drum them into you, but the markets are not perfect for everybody. Carefully consider your financial position prior to trading. You may want to do your own due diligence or consult a financial advisor. And we are not registered financial advisors, and we are not licensed commodity trading advisors. Now, before I go any further, what I want to do so I don't waste time later is I just want to go down here. This is going to get in our way for a second, but I'm going to start this from the beginning, and the charts are going to open, and I just want to show you some live charts at the end. So now as you know, there are 1 ton of self-appointed gurus on the internet. And when I started Right Line Trading 10 years ago, they all were in here. Now, I'm just going to drop the charts for now. I'll bring them back up later. We'll let them load. They just weren't around. Now they're on Instagram, Facebook, YouTube, you name it, they're there. And they've all made hundreds of millions of dollars or whatever. And now they're sending the ladder down, the ladder of success down to the little person like you and me, and they want to make us all rich. And all you have to do is give them 1,500, 2,000 or whatever. And you trade this one magic pattern that keeps recurring like during every solar eclipse, and you're going to make $1 million. And I want to try to distinguish myself from these people. Now, these people have no formal training. A lot of them tell you that they were on the floor of the Kobe's, but so what? Maybe they were the janitor. I mean, it doesn't give them any special skills or background or training. I graduated from an Ivy League university. I went to the University of Pennsylvania for 8 years. I was inducted into the Phi Beta Kappa Honor Society, which means I graduated in the top 2% of my class. When I finished my training, I was a full-time professor at Jefferson College in Philadelphia. It's on Walnut Street, and I used to walk to work every day, and it was really a nice time. But I decided to do other things, but I really enjoyed my time there as a professor. I really liked teaching. I published 15 peer-reviewed articles while I was there. I consider myself first and foremost, above all else, to be a scientist, a teacher, and an academician. I've mentored more than 30,000 traders, and I've spoken in over 25 countries. The last country I spoke at was in the Philippines. I spoke in Manila. The date's getting more and more distant, but I was there the end of March, first week in April, and I spoke to a very big convention of people, and the Filipino people were great, really nice, kind people. It's a very pretty country, but I just got out of there in time. If I had been there maybe another 2 weeks later, I'd still be there because they were just starting to wear masks in the airport, and just started to take temperatures. And luckily, I was able to get back here. You know, we're in South Florida. It's a 32-hour plane ride. It is torture to get to Manila. Now, let's take a look at day trading and swing trading and consider it to be a scientific discipline. No different than architecture, than medicine, than electronics. What has happened in all of these other areas of science in the last 40 years? They have made remarkable advances. And how do they do that? Well, what they do is they methodically test rigorously using mathematical analysis to determine whether a specific facet of that scientific endeavor works. If it does not, it's discarded. And if it does, it's embraced and incorporated into the core methodology for what you're trying to accomplish. I mean, look what's happened to semiconductors and cell phones. I mean, 40 years ago, you know, your phone was attached to the wall. Look what's happened in medicine. I mean, we've made enormous strides, and we do that via rigorous testing to, especially obviously in medicine, to make sure if we embrace a medicine, it's effective, and if not, we formally eliminate it. But for some reason, there's no department of swing trading and day trading in any university. And that's really sad, because what's happened is there's no evolutionary process that takes place in day trading and swing trading. I mean, we swing trade and day trade for the most part. Most traders, the same stuff, the same trade methodology, the same indicators, all the same, excuse my language, crapola that were used 40 years ago. Now, 40 years ago, 95 to 98% of day traders and swing traders went bankrupt. They blew their account, refunded it, blew it again, and eventually just moved on. I mean, they licked their wounds and walked away. And what do most traders use? They use price action and price patterns. A lot of times they're proffered to you as secret price patterns that people are pulling back the curtain on. And when you see it, it recurs, you take it, and you're going to make millions because they made millions. And now they're offering it to you. And Fibonacci. But do any of these stand up to rigorous analysis? And the answer is no. And we're going to go through this relatively quickly. And this is the reason that there is no advancement in this discipline. I mean, 95 to 98% of day and swing traders still wind up going broke. And that's because they're still trading, again, the same stuff. If we don't break apart from them, we're also going to wind up going broke. But for 8 years, I studied applied mathematics, and that's what I brought to this company when I founded it. A mathematical way of determining what works and what doesn't work, and embracing what's effective and eliminating what's ineffective. Now, let's take pure price action. Now, there's a million programs out there offering you the ability to trade pure price action. Now, Japanese candlestick patterns are really, really clever, and they do still have a place in our trading, but they will never make you money. What the important thing, though, is to understand is why they don't work. Because as long as there's people out there telling you they made millions trading them, they can sway you. And here's the reason why. 400 years ago, when Japanese rice traders created them, they were looking to determine who held sway over a particular transaction, and they were rice traders. So let's say there were 100 kilos of rice. On one side, there were 35, 40, 50 buyers. The other side, there were 50 sellers. And each of them had the same power. So the power of each individual buyer equaled the power of each individual seller. And Japanese rice traders created Japanese candlestick patterns to track who was in command of the transaction at any specific time. Was it the buyers or was it the sellers? And back then, 400 years ago, I'm sure they worked really, really well. But now let's go back to that same analogy. And some huge wealthy buyer walks in and he's willing to say, I'm going to buy that rice and I'm going to buy it for 10% more than anybody else who's trying to buy this rice. Because this buyer is incredibly wealthy and he wants this rice. So all the other buyers become irrelevant and all the other sellers are just going to pour that rice into that guy's face. The same thing on the selling side. Let's say some seller who's so wealthy just wants to unload the rice and just decide they're going to unload it at 10% below what's considered to be fair value. Well, it's going to go. And that big seller is going to control the transaction. So Japanese candlestick patterns are rendered irrelevant because they're based on the presumption that the power of each buyer is approximately equivalent to the power of each seller. So if one of the individual buyer walks in who can command the market, or one seller walks in who can command the market sentiment is traced out by Japanese candlestick patterns, become totally irrelevant. And if you're using them to track transaction sentiment, you're going to get run over if you're caught in the wrong direction. And that's what's happening in the market today. Over 70% of all volume in every market, every futures market, every Forex market, and on the majority of large cap, mid cap, and small cap stocks, volume is controlled by big Wall Street money. We're talking about 401k money, mutual fund money, hedge fund money, big bank money, JP Morgan, Goldman Sachs. When they step into the transaction and they decide whether it's a stock, a future, or a Forex market, whether if they want to buy it, all the other small retail traders like you and I, our sentiment becomes absolutely irrelevant. And if we don't hang on to their coattails, they're going to run our stops and take our money. And in fact, if we don't make them our ally, we are never going to make any money in this market. Now let's take a look at a falling triangle pattern. Now remember something, and this is really important. If a falling triangle and a rising triangle are not powerful enough to make you money, then there is no secret pattern that is, because there is no pattern that is more powerful than any other pattern. These patterns are created by this market sentiment of small retail traders like you and I. We create the sentiment that's reflected in a falling triangle. And you can see that you have sequential lower highs, and equal lows. And as the small retail traders control, you anticipate a bearish breakout to the downside. The problem is that if institutional money steps in, they're going to rocket price right at the top of that triangle. They don't give a hoot and a holler about your sentiment or my sentiment. If they decide they want to buy a stock, they're going to fire it out of a falling triangle. If they want to buy a futures market or a Forex pair, they are going to govern the future movement of price. And they're going to render that falling triangle pattern completely irrelevant. And this is true for every pattern that's ever been developed. Like I said, and I want to be redundant, the secret price patterns that people are charging you a lot of money for and pulling back the curtain on, when they tell me they've made millions of dollars on these patterns, I know they're lying. Now, same with a rising triangle. Sequential higher lows, equal highs, anticipation of a breakout to the upside. Bulls are in control, and the bulls will stay in control as long as institutional money stays away. We as small retail traders may have the ability to create this pattern and push it to the upside, because these patterns will succeed a percentage of the time. They're just not going to succeed enough times to make you successful. Plus, there's one other thing that you have to take notice of, and that is there's no way to make a risk assessment. One rising triangle pattern is the same as the next, and the next, and the next, and the next. It doesn't matter if one's being created by Google, one's being created by Facebook, one's being created by Amazon. So there's no way to make a risk assessment. You simply have to take it on faith that every rising triangle will create an upside breakout and a bullish continuation pattern. So if you can't make a risk assessment and individualize them for each entry, you simply can't trade profitably. So these patterns fail for two reasons. One, you can't make an individual risk assessment on every trade, and two, they're based on the market sentiment of small retail traders. And this is what happens in a lot of rising triangles. Prices just rocketed through the bottom. And here's the thing you have to remember. If you're trading a rising triangle, you have to decide where you're going to put your stop. And your stop oftentimes is a long way down. So you're going to ride this financial instrument, irrespective of what it is, a nice distance, and you're going to lose a significant amount of money. Now, I have to mention the J-hook pattern, because there are some guys out there screaming about, give me my J-hooks, give me my fish hooks. I've made $20 million, $50 million trading them. I know it's a bunch of baloney, and I'll show you why. Let's say that this is crude oil, and it was pre-COVID. COVID hits, country after country closes, all of their economies grind to a halt. There's a massive excess in crude oil. You know, crude's at $40 a barrel. It drops to $8 a barrel. It hits multi-month or multi-year support. Then the bulls come in, anticipate a bottom, and based on Japanese candlestick patterns, you get that J-hook pattern. And the anticipation is that what you're going to get is a bull flag. Move up, consolidate, move up, consolidate, move up, consolidate. And your first area of major resistance is the top of the hook. You're going to get smaller areas, but you're shooting for the top. But here's what happens very commonly, because institutional traders are smart and they know what you're going to do, and nothing gives them more pleasure than to run your stops, because it adds money to their pocket. They create a bull trap. So there's the J hook. The bulls come in the anticipation that they're going to get that bull flag pattern. Then the institutional money comes back in. It breaks multi-month or multi-year support. They catch these bulls in the trap they've set. And I'm sure you've all heard of bull traps and bear traps. Well, those are traders who are trying to call a bottom and trying to call a top, but institutional money is not done. So they're all going to get caught in the counter trend direction. Institutional money is going to run their stops and help propel this trade to the downside even further. Now, if you're at a multi-month or multi-year low and you break support here, God only knows where your next level of support is going to come in. Now, you can just take the trade out arbitrarily, but you have to have a trade management plan. And if you don't set a stop somewhere and adhere to that plan, then you're going to go broke even faster. So you got yourself a long ride down on a pattern that is never going to make you profitable. The last one I wanted to show you was a proprietary candlestick pattern. This has been patented and copyrighted. Now, the guy who sells it shows it to you in his webinar, and I go to a lot of other people's webinars because I like to see what they're offering. And sometimes I learn some good stuff, and a lot of times I learn some junky stuff. But either way, I like to listen to other people talk. And what he has created, what he believes is a reliable topping pattern. And what you see is the bulls create this wick. The bears succeed in closing the candle to the downside, and they create a hammer. You get strong bearish follow through. You're in one tick below the close of the candle, and then boom, you go right to the bottom. Now, he claims he made $15 million trading this pattern. And if I see this guy one more time on my Facebook page, I'm going to throw my phone across the room because I see him on Facebook every other hour yelling at me about this pattern. So when I was in his webinar, I'm always very respectful. I know that's a lot of baloney, but I simply asked him, what is the positive predictive value of the trade? I.e., this trade is just like every other trade we looked at. You have to take a priori as being completely valid that this candlestick pattern is going to work, and there's no way to evaluate whether one pattern is more effective than another pattern. So I said, well, what percentage of these trades work and what percentage fail? And he wouldn't answer me. So I knew immediately that what I was buying for $2,700 was junk, because he was going to give me the trades based on these formations. I didn't want them. So what I did was I just went into the charts and looked for my own. Now, this is a bottoming pattern. This is not quite as elegant a hanging man as we saw the previous hammer, but it's the same type of pattern. Bears try to push the market to the downside. Bulls close it to the upside. You get strong bullish follow through. You're in one tick above the close of this candle. You get a nice bullish move here. Then complete collapse of the pattern. It's probably because of institutional money. So a lot of these patterns fail. And there's no way that this guy made 15 million or 15 cents off this pattern. And there's one thing that I want you to remember for all time to come. And no matter what you do at the end of this webinar, this will serve you well. It is impossible to call a market top or bottom. Don't go near anything that tells you that it can predict a top or a bottom, because the tops and bottoms are created by big Wall Street money. The big institutions, when they are done buying, create the tops. And the big institutions, when they are done selling, create the bottoms. And there is no mathematical formula that exists on this planet that can tell you when that computer that they've slammed that button on, that is just pumping out money or sucking money out of that market, is going to stand aside and let that market bottom out, and then price will retrace back to mean. And there's no way to know when the institutions are done buying and they stand aside and price is going to fall because it always wants to retrace back to mean price. It can't be calculated mathematically, so never try to predict a top or a bottom. I don't want to talk about divergence, but I will in a second. Now, let's quickly, I really quickly want to talk about Fibonacci. Because I want this to be educational. I just don't want to launch into my software. I want to give you a little bit of background and a little bit of history, and this is really important. And I hope you'll take you'll take this home with you, and you'll never forget this stuff, because I'm telling you, it's going to make you a better trader. Now, Fibonacci was alive like around 12,005, like the 13th century. Now, he's a brilliant mathematician, and I've read tons of stuff on Fibonacci. Fibonacci created Fibonacci transformations, which give us Fibonacci numbers. And Fibonacci numbers, you can go on Facebook, and there are these amazing YouTube videos that you can do amazing things with Fibonacci numbers. And they describe certain symmetries in nature, like the number of edges on a snowflake and the number of ridges on a pine cone. They certainly have value and they have a place. But we are asked to believe that Fibonacci retracement and extension values somehow, magically, mystically, predict market sentiment in the market, i.e., that the 61.8% retracement value acts as an area of resistance because somehow magically there's a ton of sellers here. So if you try to trade up into this value, price is going to get rejected. Well, based on what? I mean, the movement of Fibonacci transformations and numbers over to the stock market 600 years later to tell us that it mathematically describes market sentiment is ludicrous. And if you try to trade Fibonacci off the right edge of the chart, you are going to go right down the drain. And let me tell you, Fibonacci, 50 years later, still has this attraction for traders. It's been around forever. It's never made anyone any money. But when you got a shyster who wants to create some piece of software, sell it to you, and take his phone off the hook or hide under a rock, he throws in Fibonacci because it attracts eyeballs. But I'm telling you, we looked at 1 year's worth of extensions and retracement values, and they arbitrarily break and hold. Don't ever trade Fibonacci. It is useless. And I dare anyone to show me a successful trader who uses this, because I know mathematically it doesn't work. Now, there are two other guys you got to take your hat off to, and that's Elliott and Gann. Because Elliott and Gann both actually studied price movement in the market. And they tried to create formulas which described market sentiment as they saw it. So you have to give them some credit. And I'm sure back in the day, there probably was, and maybe have been, a 5-wave pattern back when Elliott Wave described his formulas and Gann described his formulas, which are more complex, but are just a series of equations to describe market sentiment. But that's all gone now because institutional money rules the market. So that 5-wave pattern is interrupted if a big institutional trader comes in, whether and you know the what it might be, a big bank or a big hedge fund or whatever. They're going to destroy and disrupt that. So you can't use that anymore. But at least Elliott Wave and Gann, and there's somebody out there who's combined the two, so telling you that it's the holy grail of trading. So if you combine one losing pattern with another losing pattern, you come up with the biggest mess of all time. And that's offered to you as the holy grail of trading. Good luck on that one. That's like a Monty Python. Now, I'm telling you that price action, price patterns, Fibonacci, Elliott Wave, Gann theory, and also divergence. And I don't want to go into too much detail, But George Lane developed the oscillator in 1963. He only traded divergence signals. Divergence back then probably had a lot of value. But if you trade divergent signals now, you're going to get run over and over again. Because the only thing that defines direction is big institutional money. And that is why that's what we track. And when big institutional money is not operational in the markets, and we as small retail traders rule, now all we get is chop. Now, if I asked you, what is the most important thing? What is your goal, number one goal as a day trader or swing trader? You might say the most important thing is to get winners, but that's wrong. The most important thing for you to do as a day trader and swing trader, as an options trader, no matter what you do, is to avoid losers. If you can stand aside on 85 to 90% of losing setups that sort of seduce you into trying to take them, then you can trade incredibly lucratively. You can make an enormous amount of money. Anyone can get a winner. And every day trader and swing trader who's busted out of the market a million times and lost a fortune trading has gotten a ton of winners. What they can't avoid are the losers, and that's their downfall. And that's our mindset, and it has to be your mindset. It has to be, my goal here is to stand aside on every potential loser. So making a risk analysis of every entry is the hallmark of a successful professional trader. But you need software that allows you to do it accurately. Now, just to recap really quickly, maybe 50 years ago, here's the market. Just a whole bunch of small little marbles, us small retail traders, we all have equal power, and all the stuff that I just mentioned that doesn't work, maybe it did work. This is before you and I were trading for sure, and maybe before you and I were even alive. But this is not the market anymore, and it's never going to be the market anymore. Here's the market now. You got this big institutional marble, and let me tell you, as time passes and we move forward incrementally, year by year by year, this marble is going to get bigger and bigger and bigger. And we as small retail traders, we trade 100 shares of stock, or we trade 2 or 3 contracts, or we trade 3 or 4 lots. We're just going to become irrelevant in the direction that price takes in any individual market. All we can do is ride the coattails of this big purple marble. Now, I just want you to be aware of the fact that you need a system that tracks institutional money, because what happens is, in the course of a day, you get sector rotation, and that's the basis of what is really true, and that is artificial intelligence. And that is, and we know that as a neural net. And essentially, no individual stock, future, or forex moves in total isolation. Everything is interlinked in some way to everything else. Now, sometimes the correlation and the link between 2 sectors or 2 stocks are very tight. Like the link between the E-mini and the NASDAQ, or the E-mini and the Russell, or the E-mini and the Dow are very tight. But what's the correlation between the E-mini and, say, natural gas? Well, it's very loose. The point, though, that's important to know is that in any given day, usually in any given week, and really in any given month, the amount of money that's present in the markets to trade by big institutional money, the banks, whatever, is constant. And all they do is rotate their money from sector to sector based on their analysis of risk. When risk is on, they buy stocks. Russell, Dow, NASDAQ, and E-mini. When risk is off, they move to safer sectors like precious metals, like stocks, bonds, certain currencies. They just rotate their money, and we have to use our proprietary technology to track this rotation. And just remember one thing, why I'm very bullish on the markets, and this is an aside. Even if you think we're in a bubble, the reason I believe we're going higher and higher and higher. And myself, along with a lot of other, I predict that we're going to see the S&P 500 hit 4,000. The reason is because right now the Fed rate is 0. Now the Fed fund rate could really go negative, but even at 0, how much money do all these institutions make being in cash? They make nothing. In fact, the value of their cash gets eroded. So they can't sit in cash because they have people who've invested in them who expect a return. So if they sit in cash, they're dead. So where's the best place to invest their money? Well, obviously precious metals, gold is moving up nicely, and now silver is making a move. But where's the best place of all? It's the stock market. And what's the best stock market in the world? The United States stock market. And this is why investors from around the world, with the Fed printing money and quantitative easing, and in our country, they're buying our own bonds and notes. This is why we are going higher. We are awash in money, and it's going to go into stocks. That's just a little aside there. But here's our software. I want to show you a trade really quickly, and I'm going to go right to the end. Now, everything you see on this has value. The candle halo, the background color, these 3 lines. Now, the software I'm going to show you is a little bit different. I'm showing you that golden triangle, and you're not going to see it here because I don't have it on this chart. But we are still trading in the direction of big institutional money. And I want you to quickly see a trade evolve. Now, we're trading Unarenko candles. It doesn't matter what you trade. You can trade time, tick, range, whatever. But the reason I like to trade Unarenko is because I don't get hung up on candlestick formations. I don't get hung up on price patterns because they don't matter.
Target.
And you're out. Now, how much that you made on that trade is irrelevant. The only thing that matters, I mean, if you traded 2 contracts, you made a modest amount. If you traded 10 contracts, you made a lot of loot. All that matters, though, was the positive predictive value, or what is the probability that this entry is going to hit both your targets and take you out of the trade a winner. That's all that matters. The amount of money you risk on the trade is up to you. It's based on your risk tolerance, and it's also based on how much money you have. Remember, don't risk more money than you can afford to lose. That's not important. What's important is simply the positive predictive value of this entry and the fact that you can make a risk assessment on this entry. You break a pivot, and the pivot consists of a lot of sellers. They turned the market here to the downside. Price tried to come up, it was rejected. When you snap the pivot, all these sellers are going to start getting stopped out. You have a nice wick, so you've caught a lot of sellers trying to turn the market. You break the pivot, and up you go. You can make a nice risk assessment. You have the candle halo, the green background, the 3 lines. Positive predictive value is 85% or better. That's what you need to do on every trade. Now, here are the 3 metrics we use that really shadows big money, because there's no way to tap JP Morgan on the shoulder and say, hey, by the way, are you going to be buying crude oil today? What are you going to be doing with Nvidia or Bank of America? They're not going to tell you. You have to be right behind them. So we look at our neural net, our correlative markets, we look at the multi-time frame assessment of Laguerre momentum and the multi-time frame assessment of order flow. So let's look quickly at order flow, because I have to bring you up to speed on the nomenclature. Because order flow is really an important metric and very powerful, but if it's not assessed correctly, it's going to get you to tons of losers. Now, there was a company that sold this. They sold 1 million copies of this, and they looked at stacked sellers and stacked buyers, and it was never going to make money. And here's why. Any indicator that uses data from your trading chart cannot have future predictive value. It's never going to tell you where price is going to go. It can only tell you where price has been. And this is all data off the trading chart. And I only have this up here to acquaint you with the nomenclature. And this is the volume ladder. And whether this is a tick, pip, or cent, you know, for a future Forex or stock, at each price level, you have buyers and sellers at the bid and ask. The market delta tells you where there's an excess of buyers or excess of sellers. There's an excess of buyers. Not that this isn't executed trades, just traders sitting on the dome. And if you have an excess of buyers, you would anticipate the candle would close to the upside. 29.85, it closes to the upside, but positive 222, and whoops, candle closes to the downside. So if you're in the trade, anticipating an upside move based on the positive delta, you get stopped out. This curve, which continues higher and higher, is useless because this is what happens. Now, why did the positive delta create a candle that closes to the downside? The answer is easy. This doesn't measure the aggressiveness of the buyers or sellers. Let's say the buyers, let's say this is a stock selling at $50. And for a minute, let's forget about the bid and the ask, because I'm just doing this to make a point. Let's say the buyers will only take the stock off your hands for $50.01. But the sellers who own the stock are so sure it's going to go down, they'll sell it for $49.99, $49.98, $49.97, maybe even $49.96. So there's such aggressive sellers that the fact that there's an overabundance of buyers becomes irrelevant. So we have to find a way to get rid of these outliers. Now these are less than one standard deviation's worth of data, and we got to eliminate it. And here's what we do. We use the triple screen method of trading. Now, I wish I could say I invented it or discovered it, but I didn't. I read about it in 1997 in a book by Alexander Elder called Trading for a Living. He just came out with a new hardback edition. You can get it on Amazon. They pulled all the old wrinkly softcover editions off. So I don't think you can buy it. You used to be able to buy it for $1.95. Now they have the hardback, and it's more expensive. But Alexander Elder was a true genius. And in the mid to late 90s, he made millions of dollars in understanding the way we trade, because we copy him. We don't care what goes on our trading chart. We look at the two higher multiple charts, and they don't have to be two higher multiple time frames. They're just higher multiples. And if we look at any data off our trading chart, it screws this all up. It turns an independent assessment into a dependent assessment, and it doesn't accurately get us into winners and keep us aside from walking into losers. And let's say you're trading a 2-minute. You use a multiple of 3, so we do. So if you're trading a 2-minute, we look at the 6-minute and we look at the 18-minute. If you're trading a 5 range, we use Fibonacci. We look at the 8 range and the 13 range, because there is symmetry in Fibonacci. It's not going to predict market sentiment. You're trading tick, a 377 tick, we're going to look at the 610 tick and the next higher fib. You're not trading a fib, we're going to default to the closest fib, then go to the 2 higher fib numbers. So our analysis is off the 2 higher multiple charts. We ignore everything off the trading chart, and we put the delta values of these 2 higher multiple charts into a 15-period simple moving average. So we get those occasional deltas that close in the wrong direction, We don't have to care, because what we're really doing to assess whether or not the bulls or bears are in control is the average of the last 15 market delta values off the two higher multiple charts. So we get two SMAs. Again, if you're trading a 2-minute off the 6-minute and the 18-minute. And when those two SMAs are sloping up, only big money can do that. And the bulls are firmly in control. And we get a green order flow line. When the two 15-period SMAs are sloping down, the bears are firmly in control. And we get a red order flow line. And when we're in control, these SMAs are never in agreement, and it's yellow. And so we don't trade. We don't fight other retail traders. We let them fight it out and exchange money and trade and chop. And we just sit and we hold our mouths and we don't do a thing. Now, here's those two SMAs on the two higher the two higher multiple charts, down and down. And if you don't trade short, you're going to be in big trouble, because you're likely to get stopped out, highly likely. Now, here is the line. Now, you'll notice it turns green before price rises. And that's based on a mathematical principle, and it does lead price. And the principle is called hysteresis. It's taken from physics, but this is going to lead price. Now, you're never going to be in these counter trend candles again. And what are these traders doing? They're calling a top. They're saying, this is as high as I want the market. I believe the market's going to go. So I'm going to fade it. And you're simply going to go long if you're not in the market, leverage their short, run them over, and it's going to help propel the trade to the upside. The same thing here. So our ally is big institutional money, and our enemy, the people that we have to beat up every day, are the other small retail traders. We can never take money home from big institutional money. Wall Street money is untouchable. The only traders that we can beat up, and we have to beat them up every day, are the traders who counter trend trade like this. They're trading divergence, Elliott wave, Gann theory, whatever it is, they're taking a trade and they're never going to make it. Now, our second is Laguerre momentum. Now, here's the Laguerre. Now, the Laguerre doesn't measure the speed that price is moving. It measures price acceleration. Now, we use the Laguerre because every other oscillator, every one of them, is simply the variation of one formula. Now, the one that's a little bit different than all the others is RSI, but it's still basically made to create and look for divergence. And we don't want an oscillator that even thinks about trading divergence, because we don't care about it. Now, how does price accelerate, actually? The way price accelerates is that the close approaches the low. As the close of the candle continues to squeeze tighter and tighter to the low, you know that bearish pressure is intensifying. And that's what this %K line is measuring. And when it locks at 0, that's when you know that there's tremendous selling pressure in the market. And the Laguerre has a gamma, multiple smoothing factors. It was never meant to track divergence. It was only meant to track price acceleration and price deceleration. It's a second order derivation. And again, we do the same thing. We look at the two higher multiple charts. We never look at this off our trading chart. And when both momentum lines are sloping up, the bulls are in control. When both momentum lines are down, price is accelerating to the downside on the two higher multiple charts. We don't want to trade against that. And when we're in control of the market, It's yellow, and we're going to let all the other small retail traders punch it out. These are the percent K lines on those 2 higher multiple charts. And you got to trade long, or you're going to get stopped out. Now let's combine them. Now we have order flow and momentum off the 2 higher multiple charts. And when you get red, red, you trade short. When you get green, green, you trade long. Only institutional money can create this alignment. You and I, as small retail traders, we couldn't do this at all. We just create chop. Now let's look at our quant line. Now the E-mini, this is the first time I've shown you an instrument name, because now I have to. Now here's the quant line. Now it's red and the E-mini falls, and it's green and the E-mini goes up. You already know it's not looking at price on the trading chart, because that would break our rules. So is it looking at the E-mini on the higher multiple charts? Well, the answer is no. Here's what the quant line is looking at. It's looking at the multi-time frame direction of the E-mini's correlative markets. It's our neural net. It's looking at the Dow, Russell, and NASDAQ on a multi-time frame basis. So in order to take a short trade on the E-mini, we need those 2 higher multiple charts to be heading down on the Dow, the Russell, and the NASDAQ, and we get the red line. Now, what's the likelihood of the E-mini blowing up on us if the Dow, Russell, and NASDAQ on the two higher multiple charts are all heading down? Or the likelihood that the E-mini will blow us out of the water on a long trade if we've got the Dow, Russell, and NASDAQ moving to the upside on the 2 higher multiples. This is a neural net. It's a small one, but these are tight correlative markets. And this is the way we want to trade. Remember, our goal is to avoid losers. And when you get this kind of alignment, you know institutional money is involved. We as small retail traders could never do this. So we have quants for all futures, all Forex, and we have a smart quant for stocks. You can trade anything you want. Now here's putting it all together. Unless you have green, 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 or red, 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 it's chop. And this is just us trading, the small retail trader, making small pivots, and the market's choppy. When the institutional money rolls in, that's where we take the long trade. And look who hangs out to dry. It ain't us, or it isn't us anymore. Now, I automated this to highlight how important it is. I mean, this isn't a small principle. I mean, it's a major principle, and it really it's effective and operational in these markets. Now, in this big move down, this counter trend trader, this counter trend, they're all calling a bottom. God knows why, but they're saying this is as far down as the market's going to go. I'm going to trade long. What they're trying to do is catch that punch back to mean price, but you can never know when it's going to happen. And all we're going to do, my automated trade management, is a reversal candle takes me out of the trade. I'm just going to go short, run them over. Out of the trade, go short, run them over. Go short and run them over. And these are the small retail traders who fatten our wallet every day and who are ultimately going to wind up busting out of the market to be replaced by thousands of new small retail traders. Here's the same thing again. Green, 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 long only. Red, 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 short only. Now, small retail traders do have the ability to create retracements. These retail traders are trying to create a retracement back to mean price. They're never going to get anywhere. If you were going to take this trade, you're not anymore. You're going to take the first down pivot and you're going to run everyone over in these candles and head down. And remember, It's just not the traders in these counter trend candles. You've got this wick. Now, I didn't create a chart that shows internal wicks because we do trade, we see the internal wicks on a live chart, which I'm going to show you. We're running over traders who are trying to go long all the way down. Here's another powerful retracement. Retail traders, we're running them over. And as they sell their contracts, their lots, or their stock, they're going to help us push our price to the downside. Same thing here, push price to the downside. Now, there's just a couple of other things that we have to keep in mind. We want to trade an instrument that is also in a multi-time frame alignment. So if you want to trade Google long, yes, you want order flow, you want momentum, you want the correlative markets to be in your direction, but you also want Google as the instrument you're trading to be in a it's not time frame, but a triple screen assessment in the direction you're trading it. Now we have three different powers of down and up: light pink, bisque, and dark pink; light blue, cyan, and dark green. You come aboard, I'm going to teach you what each of these mean. The low-hanging fruit comes with the strongest alignment to the downside, which is dark pink, and the strongest alignment to the upside, which is dark green. Now, this is just bias, and we call it background bias. And this dark pink is created when the two higher multiple charts are aligned to the downside in a very powerful way. I don't have the time to go into what's going on, but price can meander, but it's heading down. And to the upside, we go through three different powers of up. And this is intermediate is cyan, strongest is dark green, weakest is light blue, but price is heading up. And it doesn't matter whether these candles are minute candles, 4-hour candles, daily candles, it's all irrelevant. This has to be time independent and instrument independent. Doesn't matter what you're trading, and it doesn't matter what the time frame. Now, pivots are really important, and this is the last component of our trading. Now, obviously, when price turns, you create a pivot. Now, what's important here is we create pivots at the right place. 99.9% of all the pivots that are created are created wrong. They're not created at a wick low, they're created at a candle body low. That's number one. That's the way Japanese rice traders defined it. Number two is a pivot is broken when 2/3 of a candle body traverses it. Not just a piece, not a half, not a third, not a wick, 2/3 of the candle body. That's the only thing that snaps a pivot. And I don't know anyone else that creates pivots that work in that manner. But that's the way the Japanese wanted their pivots to be broken or to hold. So we just follow their rules. Now, if you remember back about 3 years ago, there was an enormous rage. And if you didn't use this indicator analysis, you just weren't part of the in crowd. And this is an indicator that really did come and go. You know, like a stiff wind in the breeze, it came and it went. And people bought probably 1 million copies went out. But everyone got so sick of it failing that we actually did dump it. And what is it? It's market profile. You ever see anyone try to sell you market profile anymore? Well, boy, oh boy, did they try to sell you market profile 3 years ago. Everyone had a market profile, but we didn't buy it and we didn't trade it. But it did have one powerful component, and that is high volume nodes. Now, high volume nodes is a volume at price area where traders like to keep that instrument because there's a huge amount of volume that develops at that price. Now, remember, we don't look at our trading chart because it's not powerful enough. It's irrelevant. We look at the two higher multiple charts, and we get a high volume node that corresponds on both our higher multiple charts. We get this line. And let me tell you, it's a humdinger of an area of support and resistance. We can't trade into them. Sometimes they just snap. Other times they'll hold 5, 6, and 7 times. We know there's an enormous amount of traders there, and they defend this price. We don't know why, and we don't care. We just can't trade into them. And here's a bounce. Whoops. Bounce, bounce. Price bounces off like a ping pong ball. And here we go again. Up, down, and down. Now, here's the revolution. And this is our golden triangle. And it's the most sophisticated entry signal I have ever seen. We say ever developed. Obviously, I have to qualify that. I've not seen every entry signal in the world. I've never seen one that gives you an entry that has more power. Now, it has, well, I'm going to skip this here. We'll go through all this. This is all of the elements that go into that entry. It's really a complex entry. And I don't want to go into that in detail, but you're going to get all that. So you get an exact entry, you're going to get an exact exit, and all your targets are pre-configured. Now, here's an entry on that golden triangle short on Baidu. It's on a 2-minute. And if you're leveraging it with an option, you make great money. I mean, this is only a 2-minute chart. So you're going to buy an at the money, or you may want to buy something a little more complex. But it tells you that everything is aligned in the appropriate direction. Now, there's more here than you've seen before. And there's a few things here I didn't describe on purpose, because I can't throw all the data on this chart at you. It'll just go, it's just too much. But the candle halo is order flow. These two lines are split correlative markets on 2 different time frames. And this is the multi-time frame assessment of the Laguerre, split. And this will look at everything, including the background and this trend line, which I didn't discuss, to give you the perfect entry. Here's crude oil, the perfect entry. Here's the Russell, a perfect entry on a pivot break. Now here's a small entry on the E-mini. Here's a nice one on gold. Remember, as long as you get your first target out, they can go, I could have shown you 100 tick moves, or I could have showed you 50 tick moves. I could have showed you $25 moves on stocks. It's only the positive predictive value of the entry that matters. Here's a 9.5 point entry on the E-mini. This is not going to take you out. Here's the Euro USD, 48 pips. 28. Now, this is the only system I've ever seen that allows you to add on. If you get a signal here and you enter, and you get a signal close by, you can enter. If you trade 2 contracts, you trade 2 more. Now you're in the trade with 4. That's a huge lucrative trade. Here's Apple to the downside. Now, I'm going to show you live charts in a second. So basically, if you want to leverage a stock with an option, today I just spent 2.5 hours, 2 hours in the battle room, which I'm going to give you a year of if you come aboard, where I teach you how to trade options, day trade, and swing trade options. Sometimes buying an at-the-money call is not the answer. Sometimes buying an at-the-money put is not the answer. I'm going to show you the way to calculate the best leverage you can get on an entry. I'm not even going to go over that. Now, just before we go to a live chart, I want to play one testimonial for you. I'm not going to bore you with a bunch of them. And I'll just show you Viviani's. It's only a minute and a half. Hang on one sec.
I've read a lot about other systems and I've heard about other systems that, are millionaire overnight. And Mark, always says, like, you're not going to be a millionaire overnight. It's going to take a lot of your passes, but you can make good money with a low amount of hours and a lot of flexibility to where to live, where to work. So I started this about a year ago, and like I said, I worked an hour and a half a week, and I averaged about 75 grand last year, which is awesome, for a college student. Helped me to pay, my college tuition, for my apartment with it. So it's been really great for me. I'm planning on taking this on as a career once I graduate. I'm definitely going to start full time where I expect to make a lot more money.
Okay, I'm not going to play you the others, but I'll just show you. This man is from the Miami Chamber of Commerce. If I can find him here. He may not be in this loop here. Okay, well, we've got really nice testimonials, and we get them all the time. Now, here's what we did last year on stocks. We hit 130,000, then came back. So we closed up about 120,000 and change. Almost all of these trades were options. Now, here's crude. And crude just, can't tell you, I can't explain the trajectory, but it just went straight up and then slowly moved to the upside. Now, this is only 2 months. I'm sorry. It's from 4.6 to 6.6, 8 grand. Now, here's the E-mini, and this is from 326 to 626. We made just over $13,000. Now, this Heinz, who's one of our traders, sent me this. This was on July 7th. This is really proud. He made $3,372 trading. And this is all 100% honest. I mean, this is his back end, and this is what he sent to me via email. And this is just some of the text. Just took 2 revolutions short on crude and ES. Nice runner, nice ES winner, over 1,000 on one trade. Look at the ES running up. Only thing I took out was the last name, because I don't want to project anyone's last name. Now, I'm going to show you a live chart. Now, this is something that nobody ever does. Let me find him. Here's the NASDAQ, and here's gold. Now let's take a look at the NASDAQ today. Now, none of this can be manipulated or finagled. And let me tell you, I closed this chart down at about 11:30 this morning. I have no idea what occurred later on. Now, here's the open. There's your first entry. Dual greens here. This light green is fine. See the wick as your pullback. There's your entry. Beautiful trade on the NQ. Your exit is that change in candle halo. I'll scale it quickly just so you get an idea. This is a 9.5 point. That's a 936. That 36, 38 ticks maximum excursion. Trade number 1. Now we let everything else go. Remember, you don't chase anything or be concerned. Here's trade number 2. about 38 ticks, about the same. Now, see, that's a great move, but we just didn't get a signal. And we're not going to get a winner on every single trade. But we have to be, in order to avoid almost every loser, we have to be prepared to let some winners pass us by. And based upon the assessment of that, this is really a very complex analysis, and I'll show it to you right here. It's all the way down here. You can see it is essentially, that's what it's looking at. It's looking at one heck of a lot of stuff before it can decide to take a trade. It was something it didn't like. There's a next trade, and that's a winner. It went over 10 ticks. Our first target's 10, and that's a winner. That is our real live first target. 10, 20, 30. Now at this point, we're just going to see. Obviously, we have nothing here. There's your next entry, and it's a winner. This is 4, 8, 12, 13 ticks. We're out at 10. Stop to break even. We made nice money. Is it a home run? No. But does it add to our profit for the day? Yes. There's our next trade. It's at 15.29. It's a gorgeous trade. I'm not even going to scale it. It's about 25 to 30 ticks. It's the fourth winner or fifth winner in a row. And that's it. We'll take a quick look at gold. Now gold, it looks like it's graced us with no entries, which is okay. We don't have any entries and we stand down on the instrument. It means there weren't any low risk trades. That's it. I'll go back until we hit something, because eventually we're going to get an entry, and then I'm going to go through the offer. Now eventually we're going to get something. Hang on. Boy, oh boy, oh boy, it's a long time for no signal. I told you I had no idea what's going on. Holy geez. Hang on. There's got to be something going on with this, with gold, because it just doesn't look like, it looks like there's too many good trades here to not fire an entry. And I don't see anything appearing. And I can't tell you why. Sorry here. Well, I don't see anything on gold. We'll take a quick look at crude. Crude's been pretty horrible. We'll take a quick look at it. There's our entry. Break of the pivot. That's 2, 4, 6, 8, 10, 11 ticks. First target is 7. We didn't make 15, which is our second. Really nice entry. Like I said, now that's got to be some kind of error, because we've got no background bias at all. I don't know why that occurred. Hang on one sec. And we do have to check gold, because I'm pretty sure we should have gotten an entry. Okay, let me just close these. And I'm sure we'll get another signal. What was it, 47 tick? I think we're losing some of these when we close and reopen. I don't know why. Let's keep looking for one more. Well, I'm looking, but I don't see any. I only saw one on crude, and that was one that was just a day old. So, you know, we put in a new system, and that may be why it's not giving us a look back on the entries, because there are entries here. And the NASDAQ I showed you was just one day. We'll look at one more instrument, just so you get it. We'll look at the daily of. Let's look at the E-mini. Here we go, right here, and that's a winner. First target is 6, and this went 7. And you see, you don't get many, and I'm not concerned about that. All I'm concerned about is that when you get a signal, you get a winner. And let's just grab one more E-mini trade. I'm right off the page here. Wow, let's take a look at the YM. The YM is super choppy. I didn't even look at the YM today. Okay, there's an entry that did not work at 937. That's our first loser. And I'll be the last guy to tell you it always wins. Let's just keep looking. Boy, this is just, I mean, there is a ton of chop here. And I think the look back is changed because we just changed the system. We're getting signals from today and Friday. We're not going back any further because I just don't see any entries at all. And we modified the entry system, which we're constantly doing. I know this is boring and tedious, but I didn't think we'd have to look this long for entries, because usually you get a fair number. I just don't think they're projecting. Here we go, right here. And that's a first target winner. Obviously, you can't take this trade. And see, it shouldn't have signaled here because the candle halo is wrong. But here's your entry, and you've got yourself a winner. They're just not, they're just not that many entries. And I don't want to go into that candle halo, but when you open and close, NinjaTrader can sometimes change the color. Yeah, but it does not repaint ever in a live market. And we'll just look for one more entry. Now, well, we run out of space. And if I see anything, I'll just scale it so you can take a look. Boy, you got 1,000. Here's a trade, and that's a winner. Right there. I mean, there should be much more of them. And I really, really believe that the reason we're not seeing that many on look back is because we did modify the system. Right here. Now we've seen a bunch of winners and one loser. And the predictive value of the entry is about 85%. Now, this is at 953, it doesn't work. And we're off the chart. I'm not going to go any further. So I wanted you to see how it worked in a live market. The NQ, we had 4 or 5 trades, 4 or 5 winners. On crude, which I'm not sure if I found any. I think we found a couple of small winners. On gold, I could not find any. And we did find a couple of losers. But I believe it has to do with the fact that we just retooled it. Now, just let me rotate this. It shows what happens when you look at a live chart. I mean, you never know what you're going to see. But I think the NASDAQ is reflective of how the system is going to trade. And it's going to trade really, really well. And it's going to give you terrific entries. It gives us great entries every single trading day. Now, obviously, it's become a cliche to tell you that trading success equals financial freedom, but it does. There's no pressure at home. You work from home. You have no boss. You have no commute. And here's my promise to you. I promise to you that this system works. And although I don't know why I couldn't get those look back entries. I really do believe it has to do with the fact that we retooled the system. It works, and those entries can make you profitable, and allow you to close your chart almost every day, not every day, with a nice profit. But what you have to bring to the table is discipline and patience. If you have those qualities, you will become a profitable trader. Now, the workspace is very intuitive. It's very easy to learn. Obviously, that triangle is very easy to spot. It occurs intra-candle. You're going to put in your buy stop or sell stop. If the candle completes its excursion to the upside, you're in and off to the races. It can trade with any account size, because if you trade stocks, you can use the underlying option. If you trade futures, you can trade the micros. And Forex is highly leveraged. And for a small amount of money, you can trade a couple of lots. Now, we are only selling a limited number of copies because we really have never sold it for this price. And if you want to lock in the price, I ask you to put your name and phone number in the chat box. Rory will call you once and talk to you and answer any questions you have. But it doesn't obligate you to do anything. All it does is locks the price of the system in. So if you're out of country, it'd be your Skype. And Rory is not, we are not telemarketers. We're very low key. At the end of the day, if you don't want to come aboard, it's no harm, no foul. But this will lock in this price for you. Now, the indicator projects on NinjaTrader 8, but you can run NinjaTrader 8 off of multiple platforms. Interactive Brokers, Thinkorswim, eSignal, Awanda, and there are multiple others. And I don't have my, I don't want to drop the slides again, but I use Thinkorswim to power my NinjaTrader 8. But the actual indicators themselves are powered on NT8. So you just take your trades on your brokerage platform. It's very, very easy to do. Now, we give you the rapid results quick start guide, which is going to, if you're technically inclined, you can set it up yourself. If not, we're going to do a white glove installation for you. Sergio has a master's degree in computer programming and computer science. He'll log onto your computer. He'll do everything for you. Now, this is really big. You get free lifetime updates. And like I said, we're constantly making the system better. And we just did an update. And I'm pretty positive that's why a lot of those signals going back did not show, because we upgraded the entire system. Remember that the reason we have the indicator and all of the parameters that are required to flash it available to see is because different market environments require different parameters. A high volume, high volatility market is going to be different than a low volume, low volatility market. When we want to keep the indicator at 85% predictive value or better. And if the nature of the markets change, then we have to change the nature of the settings. And they come in a template. And we just send you the template. If we add an indicator in the future that increases the precision of the entry system, you get it for free. This is not a lease. This is a lifetime purchase, and you're going to own it forever. Along with any improvements we make, we're always looking to make them. Now, the VIP support's a big deal. Like, I'm always here. Sergio, Rory, Giovanna, Prashant, we live here. And we don't sell you the software, take our phone off the hook or out under a rock. If you have a question, we're here to support you. If you have a trading question, Rory's superlative. If he can't answer it, I will answer it for you. I want to make you a successful trader, and the system can do it if you have patience and discipline. If you don't push it and you wait for the system to give you a great entry, which is signaled by that golden triangle, you will get, your chances for getting a winning trade are exceedingly high. Now, we're due for a coaching call, and in the coaching calls, we have about 400 people attend. And those are all the people who are actively connected to us who purchased this system. And they got the upgrade to this, to the golden triangle. And a lot of the traders, it's open chat, a lot of these traders are brilliant traders. And they make an enormous amount of money every day. You can talk to them. What we do essentially is we consider ourselves to be a community of small traders, of small retail traders. We're supportive of each other because it's our goal to beat up the tens of thousands of other small retail traders who just don't know what they're doing. And I'm telling you, we're going to catch them in the counter trend direction over and over again. And a lot of these traders have great tips and can really, really improve your trading. And we're going to sit together. The last one lasted 3 hours, and you're going to get it on a link. Also, if I have any great options trades, I'm going to give them out to you. Now, the price of the system is $9.97. Now, that's not for a lease. It's for lifetime ownership. And if you order today, you'll get a month in the live training room with me. I make money almost every day. Not every day, because I'm not perfect. And 99% of the time, if I have a problem trading, it's because of me. I take a trade that's too aggressive, because every now and then I'll take a trade without a triangle, which you should not do, but I do. So you're going to we make really good money in that room. And also your learning curve is going to skyrocket, and you're really going to understand the system well. Now, this is really actually the wrong offer. I think I might have it on the, well, I did not put it on here. Well, you can get 3 months of my Options Alert newsletter, or you can get 1 year in the battle room. That 1 year in the battle room is where I go over. Today, I spent 2 hours in that room, and we go over, and I typed it in. I guess I didn't save it. And what we do is we go over stock and options trades. And today we went over a bunch of them. And I'll give you just a few of the ones we went over. Because I'm a really good options trader, and I reviewed a lot of my trades. We made really nice money today in a really horrible market. Bausch Healthcare, Boeing, Visa. The new ones I just placed were DraftKings, Bed Bath & Beyond, Bank of America, which was up today, a short on Disney, which was down today, Melco, which was up today. We go over all of that in the battle room. So you can take your pick. You can get 3 months of my options trades, or you can get a year in the battle room. Everybody will get 1 month in the live training. Now, you can do nothing and stay on your current path, or you can take action and join us. And I'm very aggressive in the trading room without being, without losing my discipline. And this is a solitary job. So to join about 250 other traders in the room, it makes a big difference. And it also adds discipline to your trading. When we don't trade in the room, you're unlikely to take a trade. So here's the offer. It's $9.97 lifetime. And I'll answer any questions that you have. Hey guys. Now I encourage you to put your name and number in, because we will call you. You will lock in the $9.97. You will get both of these. You will get the month in the trading room, and your choice. That's 3 months is my options alert, or 1 year in the battle room. One of the two. If you're really hot on learning how to trade and leverage options on a stock entry, the battle room is a terrific place. That's all we do. Okay, hey guys. Hey Stephen. Does this mean people using patterns that appeared before the crash of the Great Depression, even if the long-term pattern is not repeating? You know, I don't exactly know the question. I'll just the question totally, except Steve, that no pattern in today's market has any value. The only thing that has value is the direction of institutional money. I mean, what happened before the Great Depression? I mean, you're going back, you know, at a time way before I think there was even any institutional money. So you know, we're looking at we have to trade the market environment that we have to deal with today, not what was present 40 or 50 years ago. Hey, Mark. Sure, you'll get that. You'll get it on a link. Does the system work during? Yes, it works. It works 24/7. It works during the European session. I've used it to trade the Forex. It trades the DAX, terrific. The 6E, terrific. Remember, we're going to have to give you a different template because each of those markets have different personalities and they trade differently. But you can trade any instrument that you want. How dependent are the indicators on big money in the market? Would this mean the system may be less reliable? In a lower volume market, Steve, it will not give you an entry because you need the kind of alignment you need is only created by big institutional money. Now, in some of those markets, I went way back and we didn't get an entry. Now, I know that we just did an upgrade and I know that might have obliterated some entries, but you may go a whole day in a specific instrument and never get a signal. And that's good because then that means there was no real good low risk trade. Institutional money was really not at work and you want to stay away. And our goal here is to prevent you from taking a loser. If they are so correlated, E-mini, Dow Russell, should we only trade the instrument? If we do trade two instruments, the other instruments have to be unrelated to, I'm not sure what you mean by that, Steve. I mean, the quant lines or correlative markets are correlated 70 to 90% of the time. So that means 20 to between 10 and 20% of the time, there won't be a correlation. No market moves exactly like the other in tandem 100% of the time. But we were looking for the periods when they do correlate. Okay, well, Mark, if you want to use stochastic, it's fine. It's just not an indicator I believe in. Do these signals appear on the chart? Absolutely. I mean, you saw them. And they appear intra-candle shine. So you have plenty of time to put in your buy stop or sell stop. Because you're going to take the trade at the close of the candle. It's going to flicker intra-candle and then print. Let's say the candle's heading down and you see the triangle flicker and you put in your sell stop one tick below the close. Let's say it closes, it then reverses and winds up closing to the upside. The signal will disappear. Your sell stop will never trigger. You simply close the trade. That's the end of it. If the candle continues down, your sell stop is there. The signal prints and you're in. Okay, when your golden triangle is red, well, red is a short and green is an up, Steve. That's something that I just don't want to get into in this webinar. It's just too much time. I might have, Stephen, but I just want to stay on topic. Gold has 33 points long and 73 points short overnight. Yeah, I don't know why we didn't get any entries, Dan. I mean, I traded gold in the afternoon, this morning from about 9:30 to 11:30, 12 o'clock, and it was choppy as heck. And we just didn't get any trades that correlated. And like I said, there will be some big moves that we don't get. I'm telling you that right up front. But that's the price we pay for staying away from all the losers. I mean, that's a mathematical axiom. As you increase specificity, you decrease sensitivity. As your overriding goal becomes avoiding losers, there's going to be a percentage of winners that get past you. and you can't care about them because you're still going to get plenty of winners. Yeah, I don't know why that was, Shine. But Dan just pointed that out about gold. I do not know. You know what? I don't even know if it's enabled, Stephen, and that might have been the problem. But the system might have been turned off. I'm not going to go back and look, but I might have had the system disabled, and that may have been the problem. Thank you guys for pointing that out to me. I didn't even think about that. Please share your back testing performance report. I mean, I can do back testing for you. It'll knock your socks off. Hang on a second. Let me just bring up a, we can look at a few markets if you want. I'll do it real, I just don't want to take up a lot of time, but I will do it. Hey, Rory, come on in. I want to do some back testing. That's the intercom system we use here. Just set it up for me. What market? We'll back test whatever market you want. You want to back test the NASDAQ? Hold on a minute, Rory. Just sit here for a minute. We can back test the. You want to do the aggressive on the? We'll do the aggressive on the NASDAQ. We'll pick a time frame. Why don't we go back? We'll go back to May. We select an instrument, NASDAQ. $8,660 on the NASDAQ. And you'll notice almost no losers. And that's what we're looking for. Did it make $1 million? No. But that's $8,000 from May to July, 512 to 725. If you want, we can put in another instrument. Let's go to want to go to crude oil? Not crude, yeah. What do you want? What do you want to do? Gold. I will do gold. Same time period. Yeah, I just have to change the these. Yeah, let me load the gold template. I'm gonna go with the gold aggressive. I'm gonna run. It's gonna be one trade. All right, let me go with a different template. Template load. Let's go with the moderate. Oh, the date's changed. Let me go back to May. Let's run it. And that's going to be it. I'm just going to do these two instruments. And I wasn't planning on doing this, but since somebody asked. $3,930. No losers. And that, let me tell you, that's the way it trades. It has very, very few losers. Now, again, is it $1 million? No. But for 2 months, right here, all of May, all of June, all of July, to make 4,000 on crude, or this is gold, to make about 8,000 on the NASDAQ, it really begins to add up. And you can see the specificity it has. Hey, Mark, really appreciate your vast training experience along with your art of trading. I help many people and cross borders as best I can. Thanks for your kind consideration and assisting and blessings. My pleasure. Thank you so much, Mark. What are the plus signs and what are the dots? Dan, I will teach you all of that if you come aboard. But they are also signs of the alignment of the on a triple screen assessment of the instrument you're trading. Everything on the chart does something important for you. Only if I went through everything, it would take me 5 hours to do the webinar. You have a dashboard that shows which assets are getting near the signal? Yeah, I do. It's right here. They go green, red, or flat. And that is part of, I didn't even mention it, but that is part of the deal. When you see green, it doesn't mean you have an entry. It just means you have a high potential for an entry. When you see yellow, you got no chance for an entry. Now you can look at 100 stocks on this, or you can look at 5 futures markets, 12 Forex markets, any time frame. It has infinite configurability. Look at a 2-minute, a 5-minute, 15-minute, a 1 hour, a 4 hour. You can trade as many rows and columns as you want. Everybody uses that, Dan, and everyone likes it. You're right. The best options previously mentioned are verticals, calls, puts, and my calendars. That's it, Mark. Hey, Steve, could it be possible to run through as an end of day summary? Steve, you basically put me through the paces here. Just put your name in, we'll give you a call and we'll do whatever you need. Okay. Thank you for your number. Thank you, Alan. Thank you, Steve, for your number. I really appreciate it. That's huge. As a member, we have gone through a couple of updates. Honestly, this last one is so much better. Could have sold the Revo as a separate strategy, but gave it as an update, and that's awesome. Like I said, you know, we could have sold the system separately to our members, and we gave it out. Rory always answers the phone. I am very impressed. That's coming from Paul. I'm telling you, we're honestly the real deal, and all of us here really care about you. So does the system have a strategy that it takes the trades for you, and it is automated? Hector, we have a strategy system, but it's different from this. And it's not a part of this. If you want both, you have to put your name and number in, and you have to speak to Rory. But we do have, I don't like to call it automated, because that has bad connotations, because we're not money managers, and we're not licensed money managers. But if you look here, this is the strategy. This is what I didn't turn on, and this is why you didn't see a lot of signals. This needs to be checked. Now this brings up the signals, and the signals are taken for you and managed for you. But that's a completely separate system. And you'd have to talk to Rory about adding that on. But we do have it. And it does work really well. So if you put your name in there, we'll call you back. Thank you, Austin, for your name. Thank you, Bill, for your name and number. What is the loss percentage? Shine, if you take very conservative trades, I'm telling you, you saw the back testing. It's maybe 1 in 10 losers. It just doesn't take any because it sits and waits. And I'm telling you, one of the other things it does is it looks at the distance the candle is from the 50. And the 50 is mean price. And as the space between the 50 and the 15 widen, we call that the moving average differential. And when the moving average differential gets really wide, that's overbought. So the system takes a trade only when price is fairly tight to mean, which is 50. It has a lot of restraints on it. And you won't get a signal unless it's a really, really low risk trade. So the loss percentage is very low. You are going to get losers, but there aren't many. And you saw, I mean, I wasn't going to do any back testing. And you saw in the back testing. Were the examples of the golden triangles you looked at discretionary? Listen, these are discretionary. There is a strategy system which will signal and take the entry. But that's a separate system. It's not 997. I want to make that clear. So, because I don't want anyone to be disappointed. This is a discretionary system. You see the triangle, you're going to take the entry. You get a month in the live trading room and either 3 months of the options alert or a year in the battle room with me. And I take that battle room real seriously because it's where a lot of traders learn how to trade, leverage an option with a stock. Or I'm sorry, leverage a stock with an option. I'm talking too long. Hey, Zelinka. I am still confused about Revo signals. We'll get you all set up. Don't worry, Zelinka. We got you covered. And I will work with you if I have to one-on-one. So do not worry. Yeah, the golden triangle is the revolution signal. It is. I didn't want to call it that. And the reason I didn't is because it has implications of automation. And I don't want there for anyone to think that what the 997 includes is that automation. And I just wanted to make that clear. If you're interested in the automation as well, if you give us your name and number, you can talk to Rory about it. I mean, that's not a problem. Hey, Mark, how many markets can you watch at one time? Me? If you're trading stocks, I have a hit list. So maybe I'll watch about 20. If I trade futures, I can only watch 5. markets. On Forex, I can watch 12 markets. If I watch more than that, I get information overload. And the problem with the Forex is, let's say the euro strengthens really strongly. All the euro crosses are going to start firing off buys. And you're going to have to decide which one you want to take. You know, the euro yen, the euro pound, the euro dollar. They're all going to start, you know, so, but that's a good problem to have, Mark. I mean, the number of markets that you want to look at is really up to you. I mean, I got traders look at the whole NASDAQ 100, and I don't know how they do it, but they do. Hey, Steve, is there a reason there were 2 entry signals that you said? You know what? That's because we just upgraded the system, Steve. That's all. They were not there, and they shouldn't be there. And we really did. I mean, somebody in the room just typed in, we did a huge upgrade of the system. And that's what you saw that back testing on. Almost no losers and really nice equity. Not $5 million, but what you would anticipate if you traded really, really well. You listen, Ed, you know, it wasn't part of my plan. The back test is all the traders. Well, remember, Steve, the Unirenko is not it doesn't back test precise, but essentially those tests, those trades that it took were the ones that you would have taken. Yes. Listen, Shine, I will make you a 30-year bond template if you want. We don't have one right now, but if you want to trade the 30-year bond, you can. You're not going to get a lot of entries on the 30-year. That doesn't have a lot of volatility. But if you want to wait for an entry, you'll get a really good one. And I'll configure a 30-year bond template for you. It'll take me a day or two, but I'll make one for you. And if you have the 30-year bond, you'll also have the 10-year treasury note, because they're going to be almost identical. Hey, Steve, on the back text max drawdown, I know it rarely takes a loser, but remember, Unirenko back testing is not 100% accurate. I want you to know that. Thank you, Steve. Thank you, Keith. I appreciate that. Do we get the market? You get the market analyzer, yes. You know what? For some reason, I knocked that slide out, but everyone gets the market analyzer right here. Can you show us again the quick sample of the triangles? Oleg, I just can't, because we're now a whole hour overtime. We're at 6 p.m. and we're supposed to end at 5. And I did back testing and went through a whole bunch of markets. I mean, it's just getting too late, Oleg. I'm sorry. If you want to, you put your name and number in, and Rory will show them to you. Okay? Thank you, Stephen. I appreciate that. And thank you for your number, Bill. I appreciate that. What is the price of the live trading room after the 1 month? That comes with a $997. Sounds like a great system, and thank you for your number, Don. It's 200 and it's $199 for you guys, and it's up to you whether you believe it's worth the price of doing business. I think it is, because I mean, I literally spend an hour to an hour and a half every day teaching. I mean, it's just not a room where I trade, and I take the trades live and call them ahead of time. I also do an enormous amount of teaching. But in that 1 month, you'll make the decision as to whether or not you think it's worthwhile staying aboard. And most of the traders stay aboard, and they do it because they want to. If we charge you because you forgot to cancel, and you see the charge, just call us and we'll wipe it off for you. So do not worry. If you don't want to be in the room, we will not keep you there. Hey, Dick. It does give an audible alert, Dick. If it was trading live, you would get an audible alert. Okay, thank you, Zalika. Hey, Paul. I too need the configuration for the rev. Okay, well, that's a little ways away on the Forex, Paul. But I'm working. Let's get this all. I mean, we will go there. A platform fee to Ninja depends upon whether or not you're going to use Ninja as your live platform. Like, let's say you're going to run it with Thinkorswim, which is what I do. I pay no fees to NinjaTrader because I don't trade a live Ninja account. I trade my account off of Thinkorswim. If you're going to run the system off of NinjaTrader and you're going to open up a brokerage account with Ninja, then they will charge you a platform fee. It's cheap. I think it's like $150 a quarter. It's not a lot of money, but if you trade Ninja, they're not going to let you trade the platform for free. If you have a broker that we can attach to the platform, like I do, then I run Ninja for nothing. It all depends upon what you're trading. Paul, we do not have it worked out yet for Forex, simply because of time. Eventually, there will be Forex templates. It's the future, though. And I can't give you a time frame because we're working so hard on these. But this system can definitely be used to trade the Forex. We just have to get there. And you will get that as a free upgraded add-on when we get to it. Hey, Steve, can trading Forex be replaced by trading the Forex futures if we decide to trade Forex pairs? Can this be done? Would we need to get a lot of templates? Steve, you would need a template per Forex pair, but it's really easy to set up, and we'll do the setup for you. So you don't even have to worry about it. It's not hard. But remember, when it comes to configuring, we'll do that work for you. And I'll show you how to zip them up and only unzip the charts you want to trade when you see the market analyzer go green on the Forex pair. No, the NDT is a completely separate system, Zalika. You can get it for life very inexpensively if you own the software. But it doesn't come with it. What's the battle? The battle room is where we just spend, it's supposed to be 1 hour, but we always spend 2 hours plus looking at Revolution's entries and how to configure a perfect options trade on that entry. And we spend a lot of time doing that. I mean, essentially, I teach traders how to day trade options. You don't need it, Steve. I mean, we teach. I do teaching in there, and we'll pick an instrument. We'll look and see if we have an entry. Usually, what I'll do is I'll put in the entries on the options I just got. Like, we executed 3 options positions today, and I put those entries in, and I show the Revolution signal to trigger us into the options trade, showed how I configured it. There's a lot to taking an options trade, and I go through all of it. And then I showed everybody my record from 2017, 2018, and 2019. every options trade I took in the last 3 years. So everyone wanted to see the track record. And I've really done outstanding. Hey, Shine, thank you for your number. Shine, the amount of money you make, it's possible to make 1,000 a day. It all depends upon the amount of money you trade. Really. I mean, we have people in the room that make 2,000 a day, but they trade a lot of contracts. Great, Paul. Thank you. Hey, Noah. Okay. Okay, God bless you too, Noah. I really appreciate it. I hope just go to rightlinetrading.com. That's where our phone number is. And look, I look forward to having you guys there. I work really hard to make money every single day. The entry's a terrific entry. And the market's really moving after hours, let me tell you. All right, well, listen, have a really, really wonderful afternoon, everyone. And whatever you do, I wish you the best of luck. Stay healthy, stay safe, stay away from the virus, and take care of yourself. And I wish you all the best of luck. And listen, you're up against the other small retail trader. Let's do the job and let's beat them up, because that's what we need to do. Take care and have a great, great evening. Bye-bye, everyone. Hey, Rory.